Today I'm going to teach you guys how to maintain a 75% win rate while also having a high risk reward trading at all-time highs. Let's get straight into it. So today I took these setups here, 3 winners, 1 loser, and the average scores was about 3. And as you can see, these are all the setups, and every single one of these wins, you can see what they have in common is they were all pro trend. And they were also in alignment with my daily bias indicator. The only trade that was a loser here was actually the counter trend trade. So that's definitely something you guys want to be keeping in mind whenever you guys are trading on a daily basis. So let's go straight into these setups. Let's first go to the higher time frame and see what I was looking at initially. So initially, as you can see, I see that we are close to all-time highs here. If we zoom out to the higher time frame, let's go to the 4-hour. You can see we mitigated the 4-hour demand here. So what am I viewing structure on the higher time frame? Well, this is a pullback. This is a mitigation cycle to then create a new high at some point because we're trading at all-time highs. You want to trade with the trend. Now, when I went to the 1 hour, I saw we mitigated 1 hour demand already right here based on this candle here because we have an imbalance right here. Again, I have a video talking about fair value gaps if you guys don't know what those are, but basically the OB is the first candle presented in a 3-candle formation with the fair value gap, and this fair value gap must be here. However, I never ever mark the fair value gap because it's not that accurate. A lot of people trade fair value gaps, but for me, what I find I trade is a lot more accurate than fair value gaps. I trade the mitigation. This is mitigation of 1 hour. So we mark this real quick just for you guys to see visually. There's the 1 hour, and then I went to the lower time frame. So when the market opened today, all right, as you can see, this is around 9:30 open. Again, I rarely ever recommend you guys taking trades before 9:30 open. We tend to get chop or consolidation or small ranges where you will not be able to really catch the expansion most times, and you're probably going to get liquidated. In this case, that's exactly what happened here right before market open. So there's a consolidation here, but basically what happened here is we made a break structure to the upside. All right, and we're still bullish. Keep in mind, we're bullish because high time frame context. 4 hours bullish. We mitigated the 1 hour origin here to go higher. So at this point, we already have a nice reaction here. We failed supply here, as you can see, and we also failed supply here. So I'm looking for us to go higher. So here's my A+ setup here. We have a liquidity sweep marked right here, and I wait for my entry model. That's all I'm doing here. So wait for my entry model, have my limit orders there set. You can either take it with a conservative standard stop loss, keep your stop loss here for 3.56 risk reward, or you keep it with a tight stop loss aggressive for 7 risk reward. All right, this is completely dependent on your trading style, whether you want to keep it there for conservative or aggressive. In this case, aggressive, you would have actually more than doubled your risk reward, but the target here was very straightforward. It was just basically the next high here because we had this high here internally. In this case, this is your internal high for this structure here, but this is an external high for this structure here. All right, so remember, you have to put the pieces together. There's substructure there's basically fractal structure for every single other structure. All right, so let's mainly focus on that, and that's my target here because if we go on a 30-minute, for example, this would look a lot more clear. This is 30-minute structure here, and hence the structure initially here would not be 30-minute structure. This is structure on the 5-minute, 1 minute. This is 30-minute break structure. There's my TP. Next, I got off the charts here. I wasn't on charts here. I missed this move here, unfortunately. This was a perfect stop hunter setup. Again, if you don't know what this is, check out the course modules within 100 Store course. I have 2 spots there currently, open for the lowest price possible at $3.99 currently. Within the next 48 hours, those spots will be gone, and the price will not be $3.99 anymore. So here is the stop hunter setup here, and you just target again next internal high. You could get 2.4 risk reward, 3-ish. If you held towards all-time highs, easy 8-9 risk reward, but I did not even take this trade here, unfortunately, and missed it, and so I just waited patiently. Again, you want to sit on your hands and wait patiently. Let the market come to you. Don't force trades, even though you know the direction. You want to wait for the market to give you your entry model. The reason why for this is because it will give you an edge over the market. If I just entered randomly here, even though I know it's bullish, sure, I could have a very high win rate, right? But my risk reward is only 1-to-1 here. Why do I want to take this 1-to-1 risk reward trade when I can be more patient, wait for my setup here, marked by this internal sweep here, because I taught you guys this all the time in videos, but this low made a new internal high, and so you take this one. Now you can also take this one here. I discussed this actually on a live stream previously, but this one is not as prevalent of this major internal low here. So I'm majorly looking for these bigger swing internal lows, not the small ones here in the middle. So this is the sweep here to 3 sword, target at the internal high. Again, you could have held towards all-time highs. This is much bigger of a banger than I thought. 16 risk reward. You could have just been logged off for lately a whole month off just this one single trade. A lot of people don't even make 16 risk reward within a single month. So this is 3 risk reward there. And then again, you could have caught a continuation with the OB limit entry model here. Just trading this internal structure, understanding time theory here. We are basically creating new internal structure, riding the rally up. This is a trend day. Again, 1 out of 10 days are tend to be like this. And if you can recognize these days early on, because if you think about it this way, right, we're not creating any more swing pullbacks, right? We're not creating swing structure like this anymore. We're just slowly climbing internally. That's when time theory comes into play. Along with looking to the left here, there's nothing that will actually cause us to go lower, because the low move was already here. We had the low mitigation cycle here. There's no reason for us to come back up here and then come lower again, especially after we held this 1 hour demand and we're off a 4 hour demand. This doesn't make any sense. So you want to make sure you have your direction correct. If you have your direction correct, that's going to already boost your win rate. All right. So let's move on to the next trade. Next trade was a dumb, silly trade. I'll be honest. I could have caught like almost 2 restored off this, but unfortunately didn't go break even either. So this is a technical mistake on my end here. I was waiting for a manipulation leg here. We have a manipulation entry here, so I don't take this and I wait for the second entry. Second entry was here off the OB entry model, 3.56 risk reward, and it later just shot up and blew out my stop loss for a -1, which I'm okay with, because I realized, I kind of took this emotional trade. I shouldn't be scalping this. So the correct way to trade this would be scalping this for 1-to-1 or targeting the next internal low, which is here. There's also another one here. Like I said, sometimes stop hunters, they'll take out multiple internal lows, and that's the decision you have to make. Do you want to take the stop hunter where it only takes out 1 internal low, or do you want to wait for 2 internal lows to get taken out? If you wait for 2 internal lows to get taken out, you have a tighter stop loss, a better entry most times, and you get a higher risk reward. But just something to keep in mind, you want to balance between the both. So I ended up basically TPing here. Not TPing here, I meant, sorry. If I was to scalp this, you would TP here, and you'd take the stop hunter here. Your entry would be here. You would cover prior to mitigation, which is down here. You get 4 and 1. So I could have been up +5 risk reward instead of taking just -1. So that's a huge difference to my P&L, as you can see. So even small decisions like these can vastly affect your P&L intraday, especially when you're making a mistake counter trending, because you miss out on the pro trend move. So that's even worse. So lesson learned here. Made an emotional mistake here of not even going break even at all or anything here. I don't take partials if you're new to my YouTube channel, so no partialing for me. It's either stop loss, TP, or break even. Next setup here, really straightforward. I knew at this point, okay, supply has failed so many times. We're also going to my high time frame draw of new all-time highs. That was previous all-time highs here, marked by this right here. And so I was basically just playing off a internal mitigation here. This is just an internal OB continuation. And a stop loss, give you some breathing room. Remember, it's a limit order. If you're waiting for confirmation, you might have got something like this potentially, but I'm not on the seconds here. You can be. And my limit order here, stop loss below here, right, to cover this. And then 2 risk reward here. Basically, target was just high time frame draw liquidity. Since it's all-time highs, we tend to go a little bit further past all-time highs. Sometimes we boom with one massive candle. You can catch a very nice risk reward. But I just have my TV slightly above. It's not a big deal. It's not really a big risk reward difference. It's very minimal over long run to your P&L or equity curve. But, I was fine with just having it slightly above, and that's up to you guys. However, I will recommend, if you're trading counter trend, you never want to have your TP slightly below or above, or basically after where you should be TPing, because that's going to affect your chance of potentially missing the pro trend move, and you don't want to be caught in that, and you also don't want to lose unrealized P&L. So those are the setups today. Hope you guys did take a lot out of today's video. 3 winners, 1 loser, basically 75% win rate at almost around 3 risk reward average here. This is how you trade all-time highs. Hope you guys did take a lot from today's video that you can implement into your future trading, because again, we're trading all-time highs. You guys want to be following the trend, but you also have to understand when to follow the trend and when not to, right? Like for example here, if you're following the trend bullish, you're gonna take a lot of losses because look, this is counter trend. But this is in hindsight, so you gotta know when to shift your bias to bullish and bearish. But once the bullishness kicks in, right, 1 hour origin here, you need to immediately shift bullish here off this initial mitigation, or you wait for confirmation like I did, and then you could take this. Now I'm not trading London session here, so I would have missed this anyway. But if you were trading London session, you could take the risk of taking that initial stab. You could have caught like probably a 1 to 30 risk reward trade here, long to be honest, within only like 12 hours. Or you wait for structure to show its hand, aka either breaks the structure to the upside, change your characters, see supply fail. For example, supply here failed. Supply also failed here because you did not go lower here. We have a break structure to the upside. This should have held. This also did not hold. So multiple times where supply is failing, and this is basically the start of a new 1 hour leg. If you wanted me to show you an example of what the trade risk reward would be if you took this during London session, depending on where you want to play. If you want to play aggressive stop loss, this would be your setup here, targeting all-time highs. It's a 1 to 36 risk reward trade using my strategy and entry model. So that's a 1 to 36. If you use the standard stop loss, which most of you guys in the course, I know that are gonna pay us to use this because it's a higher win rate. It's about 13, 14 risk reward, which is not bad at all, because think about it this way. You're entering here and you're just letting it run for the rest of the day. You don't have to do any of the busy work or handle your emotions in a sense, because you're already in this trade. You're less prone to really revenge trading. You can't really even revenge trade here because you have this active position open. In futures, you can't have a short and long position open at the same time. In Forex, you can. So it does depend on what type of markets you're trading, but most of you guys nowadays are trading futures because there's tax benefits with the 60-40 rule, and there's no spread really on futures. So hope you guys do enjoy today's little recap. If you guys did enjoy, make sure to leave a like, comment, subscribe. Again, there's 2 spots open for the 100 store course at the discounted price, only available for the next 48 hours at $399 before it goes back to the original price. And I opened up recently one private one-on-one mentorship spot. If you want to lock in on the high ticket program, get one-on-one private calls with me, and start becoming a full-time trader, click the link down below to apply, and I'll see you guys in the next video. Peace.